Hey, what's up, everyone? This is Evan Carthy from evancarthy.com. Today is January 23rd, 2019, and we'll look at IBM, Procter & Gamble, and United Technologies. The lead from CNBC today is talking about how their earnings is making the stock market rise. So let's analyze these stocks, see where they are, see where they could be heading, and like always, I'll give precise entries and exits. No hedging. Here we go. So here's IBM right here, and as you can see today, they reported really good earnings. You see they had a huge move up. What we're looking at right now is the daily chart time frame area. But I personally, for all three of these stocks, I'm not in any of them, long or short, and I have no plans to be in the next 24 to 48 hours. So my money's not on the line here. But if it was, and I was looking at it, here is what I would be looking at. So here we have IBM right here. This trade is going to be the lightning trade setup. Here you have your pivot point right here, pivot point right here. And as you see, price broke out below it, never hit the 127 Fibonacci extension level, so it is still an active trade to the downside. Came back up, and then today had a huge move up from 124 all the way to minimum 130, and created a huge gap right there, and stopped once it hit the 50% retracement level. So right now, I would be more looking to short this than I would to go long for the near to intermediate future. And here's the reasons why. So price went up, hit the 38. The rule I have for the lightning trade: if it hasn't hit the 127, comes back up and hits the hits the 38% Fibonacci retracement level, then the next exit is going to be 113, or just above it. We'll say 114, 115. In my other videos, I say I always like to get out a little bit ahead of it, just to make sure I get out, rather than trying to squeeze every last cent out of it, because I've seen it barely come back, touch, hit the line, and then go back up the other way, so you may not have gotten filled. But right now, the exit, if you do go short at 132.95, I would have it be around $115. But if price continues to go up, let's say price continues to go up, doesn't retrace back and hit the 113, and it hits the 154.59 level around there, then you'd move your exit to 134, about 21. But you'd have a little bit higher, at least 135 or so. And so that's where it'd be right now. The reasons why I'm looking at least some pullback to it sooner than later: one, you have this huge gap right here, and as I mentioned yesterday, that gaps over 90% of the time come back and get filled. Now that doesn't mean the other gaps don't go up and get filled first. It definitely could happen that way. I mean, from over here all the way over here, back from, golly, when was that? That was back in 2014. You have this gap way up here that, as you can see, it never went up and got filled. So price definitely could keep on going to fill up that gap. Plus you have a gap right here as well that hasn't been filled either. So those definitely connect as magnets for price to come up, hit both of those. So in this trade right now, personally, in my unprofessional, do not follow my advice because I'm not a financial advisor advice, you make your own decision. Don't go off by what I say. I'm not going to be held responsible for any decisions that are going to be made. But the way I look at it is, I wouldn't get in this trade either way right now, long or short. I'll wait to see what it's going to do. If it continues to go up, move up closer to the 154 level, then yeah, I would be looking at shorting the stock rather than going long for it, especially if it hits the 154.59 level. Then that would make your exit around the 134, 135 level, and be going short for it. So you also have down here the MFI. It's getting close. It barely touched the overbought section before it retraced and then went back, so it still has a little bit room to move up some more if it wants to do that. Doesn't necessarily mean it's going to happen or won't happen. It's just, like I said in the other video, it is just a guide for an indicator that I follow. I don't take my trades off of it. But for right now, I would just wait to see what it's going to do. If it continues to go up, gives it closer here, then if I was looking to get in, then I would short it. But like I said, I'm not looking at taking this trade anytime soon or anything like that. But that is my opinion. I'd be looking for it to go to the upside, short it, and then my exit would be around 135, 134. So that's it for IBM right now. Now for the next one, we'll go to P&G, Procter and Gamble. So this again, the setup we're using right here. This is lightning trade daily chart, so it's gonna be longer term time frame right here. Set up obviously than the 1 hour chart. So you have a pivot point down here, you have a pivot point up here, and that's all these arrows are right here. It's just an indicator that converted over from MetaTrader 4 is called 3 levels easy semaphore. If you use MetaTrader, you can find it online for free. I paid some programmers to convert it to Thinkorswim and NinjaTrader and MetaTrader 5, just because I like the way that it formed the pivot points. It does redraw them, so you can't. So if you see a yellow arrow form, you just can't trade right off of it, thinking that that's going to be the perfect short, because it can continue to go up and the arrow will keep getting repainted on it. So it does it after the fact, which is fine by me, because I'm just looking at using it for pivot point levels and however the algorithm is on it. The yellow arrows are stronger levels, greens are medium, and then gray ones are the weakest for it. So if you have it, going from yellow to yellow, you're also going to have a higher percentage move of what's going to happen based upon the pivot point areas. But anyways, that's just a little breakdown from that thing. So we have pivot point down there, pivot point up here, came out and broke it up. So it starts the lightning trade setup right now. Came down, retraced a little bit, never hit the 38. So the 127% Fibonacci extension level is still a valid exit for it. So if you are in this trade, if you are in P&G, you're looking at getting in. The way I trade this, just the way I would do it. If I was going to get in right here, I had some call options or whatever it is. My exit would be around the 102 level. The highest 102.85. Like I said, like in a little earlier, let's keep it round number 102. So right now it's at 94.84. My exit would be around 92, and that's assuming it hits that before going down and hit the 38 Fibonacci retracement level down around 83.60. If it does, then your exit would be just below the 94.72. If it doesn't hit come back up at 94.72 and it goes down and hits the 0% Fibonacci level around 64.82, then you move your exit just below the 50% retracement level, which is 97.77. So I can just make it $79.77. So I just make it $79. But so that's what it is for a lightning trade. I could definitely see it based upon apparently they had strong earnings today, it popping up to around the 102 level, getting out, make it more of like a minimum play. The only thing, there are a couple things to watch out for here to the downside. I highlight, you have a gap right here, and we all know how I feel about gaps, so just watch out for that. And then also today it created another gap right here in that move up. So obviously it comes down. If it comes down and fills this gap before hitting the 127 level, then that would initiate the second part to the trade, where you move your exit to around $94 for it. But yeah, so that's why I look at P&G right now. If you're long, I think there's definitely good reason to believe it could go up to 102 with that strong earnings, and then eventually have some pullbacks and fill these gaps eventually. But for right now, yeah, it looks like it's pretty strong. But like I said, I'm not looking at getting in this trade, looking at trading it or anything like that. But if you are in it, looking for any unsolicited advice that I'm given, then 102 would be right now would be the desired exit level. Now let's look at United Technologies, another one with strong earnings that CNBC is saying move the markets from today. So again, this is another lightning trade right here. This 10-year chart we're doing again. You have your bottom pivot point down here. You have your upper pivot point that we're looking at right here. Price came out, broke above it. That started the lightning trade setup for it. And since then, it just started going down, hit the 38 levels. That means the exit is at the 139.34 level. Of course, a little below that, 138, 139. And it's gone up, hit it. Now it's just waffling around kind of a no man's land right here. Now this is close to another setup I have that I'll talk about some other time. It's one that I don't use very often. It's the 3850 61.8 trade setup. I know, real original name, real creative right there. But how that works, I'll just mention it real quick. How that one works is, it wouldn't be a valid trade right now, because to make it valid right here, you would have to basically, you have the breakout from that pivot point level, but you're looking for price to go up and at least hit the 127 level to take that out. Then when price eventually comes back and retraces to the 38 level right here, you can get into it, and your exit would be the 100% extension around 139, 138. If price doesn't go up and hit that, comes back and hits the 50% retracement level, then you move your exit to just below the 38% level, say around 117, something around there, 117.50. If price comes down and hits the 61.8% level, around $104.70, then you move your exits to 100, a little below 111.32. So that, and then you know, if price continues to go down, you don't worry about it. You just leave your exit right there, just below the 50% extension level, and you can get in at other areas if you want to. So for that trade, it's not valid the way I trade right now, since price never hit up in the 127. But if it did hit, then that would be something I'm looking for. I mean, here you can see right here, say it was valid. We're just saying purely hypothetical. If it was valid, if it had come up hit the 127, okay, came down and hit 38, nothing, because it never came up and hit the 100% level. So it comes down and hit the 50s, and the exit goes here just below the 50, but I just see it never did. Came down here and hit the 68, so you move your exits just below the 50. So if you are looking at trading that trade setup, or what I have done, the way I trade that setup, I usually don't look for to trade the 38. If I do, it's by far the smallest purchase that I make, since you could end up taking a loss on this trade right here if price goes down and hit the 68. 61.8 level extension. So my usually first entry at the very least is at the 50% level, and then the second, which is usually 2 times the purchase of the first one at the 50%, is at the 61.8% level, and then of course you move your exits down to the just below the 50. So that way the 2 times purchase from what you made from the first one at the 50% level more than makes up for that small loss you'll take on it. But if you just want to be really safe, then just wait for the 61.8 level to get hit if it gets down there before when the other levels get taken out. But a little sidetrack, but that's just another trade setup that I'll look at in the future to see if there is a trade, just because the profits aren't as high as the other trades, but they typically do move a whole lot faster, you know, within a couple days to hours, rather than a couple weeks or months with some of the other ones can take if you trade in the daily chart. So, but right now with the lightning trade right here, okay, broke up, came down, hit that. So right now your exit is just below the 139.34. So we'll say 138, 139. This is the lightning trade. Had good profits, came up and hit it. But here you have the MFI right here. Look, it's extremely overbought right here. Plus, apparently that 38's turned out to looking like some resistance right here. So, I mean, if you are long, the exit I'm looking at right now would again be somewhere 138, 139 right there from the 117. But if you're waiting it on, but what again, I like playing it safe whenever stuff like this is happening. So what I would wait to do is, if price continues to go down, maybe comes down here, makes another bottom, if you want to get down there around the low 100, something like that, and then getting right there, because in worst case scenario your exit would be around $110 if price went down and hit 83. Then I definitely would be looking at getting in there, assuming price hadn't come up and hit the $138 right there. So if you're in it right now, there's a small gap right here, but you know, not a huge one, especially for it's around 113 up to 114.5. So not a huge one. I mean, it'll eventually probably come back and get filled someday. Could be tomorrow, who knows. But yeah, if you are long, that's the X I'm looking at right now. Or I would, if I was in it right now, that's the X I'd be looking at, 138, 139 from its current levels. If price continues to go down and it goes down all the way down to $83.29, then the exit I'd be looking at would be just below the 50% retracement level, $111.32, and so it would be like around, say, $110.50 would be my exit. But let's little bonus just popped into my mind. Let's look at the ES real quick, and the stupid indicator always gets loaded on here. I never use it. I'm not sure why it gets loaded on. So the other day I had mentioned I expected a pullback to happen in S&P, just based upon it hitting some of the levels of getting filled from the lightning trade setup, and so far it has a little bit. It doesn't mean that, you know, a huge retracement has happened and it was bumping against the upper edge of the MFI. So as of right now, I mean, it's not really showing anything on the daily chart for which way it's going to go. Just have to wait and see if it's going to keep on consolidating for a little bit or move down to a good extent, move up even more. Let's go over to the 1 hour chart and let's see if enough gets loaded on there. Yeah, I think your one stinks when it comes to this kind of stuff. So here's the 15-minute chart right here. Right now, it's looking like, based upon these 2 points right here, you see this would be a lightning trade set up using that pivot point and that pivot point up there. Price came down, broke out of it, initiated the lightning trade, went back up. It's hit the 38. So for the downside, if you're looking for like a short-term play right now, and I'm not planning on getting in on the ES mini anytime soon. Look at that, hit perfectly off the 38% right there, 26.39.96. So right now, if you're short, I think market's going to go down. You're looking at the 26.16.5 level, a little bit north there, 26.17 or so, to be your exit for it. Of course, price could continue to go up right now, but for the short-term play, it'd be I'd be looking at going short rather than looking at going long, with the first exit being 26.17.50, around there, something like that, from 26.38. And then, if price keeps on going up, hits the 26.78 before hitting the 26.16, then you're looking at your exit being just north of the 50% retracement, which would be around, say, 26.48.50, something like that. So if you are in it and just looking at where you think it's going to head next, that would be my guess about where it's going to go as far as the way the lightning trade set up. So if I was trading it right now, where it is. So anyways, hope that helped. If you have any questions or anything like that, feel free to let me know. If you want me to go over something specific, be glad to do so. Let's go make some money. All right, take care. Talk to you later. Bye.